Good morning and welcome back to Almus Market Mornings. Trump's pitching a $5 million gold card deal for wealthy foreigners, echoing those golden visa programs worldwide. Meanwhile, the Treasury Secretary is flagging a weak economy, which has led to commodities, gold, and oil sliding, with markets now betting on two rate cuts by December 2025. Good morning, JK. Is this golden visa program another way to reduce the deficit? What's your take?
Hey, good morning, Swaraj. I am not sure about the how much it's going to achieve in what Trump is looking to get, but definitely it seems a novel scheme. And in fact, what it does is it replaces the existing EB-5 scheme, which required $1 million to be paid to obtain US citizenship and then invest in businesses. But here, the conditions are that documentarily you have to establish that you are creating at least 10 to 15 new jobs in the US apart from securing your citizenship. So eventually it is for big business people who have plans to invest in the US. So even if it is successful, it has to take some more time. That is what I feel. Now, on the markets, of course, last 2 days have seen a bit of important numbers, particularly from the US. In the US, we saw the consumer confidence slumping, big time. And in fact, it has 12-month average inflation has surged. While the actual consumer confidence data itself shows a drop by 7 basis points. Also, the expectation index, which is based on consumers' short-term outlook for income, business, and labor market conditions, have dropped 9.3 basis points to 72.9. And this is the first time since June 24 that expectation index has fallen below the threshold of 80. That usually signals a recession, but then various historical evidences of recession and conditions have not really worked. But definitely, consumer confidence index slump has come in the wake of various other surveys that we have seen of late. We have indicated about the Philly Fed survey and then also the Michigan consumer sentiment. All these surveys have, pointed to negative, outlook for the U.S. economy from the consumer point of view and also from the business point of view. So I think we need to wait for hard data. Yes, as you said, we also had the U.S. Treasury Secretary Bessent saying that U.S. economy is in a brittle position due to excessive spending by the previous administration. Job growth has been concentrated in the government, and basically indicating that the private sector is not adding to the employment much, and is particularly paying attention to 10-year yield, and believes Trump policy should reduce it. So actually, we have seen the 10-year yield in the US now drop to below 4.30%. That's a big drop from the high of 4.80 that we have seen. Also, even the market Fed Watch tool shows now probability of nearly 65% that US rates will be cut twice as against one cut that was being expected earlier. We also had some more positive news on the Ukraine war. Indications are that the President Zelensky could be visiting the US for negotiations. And obviously, US is negotiating with both Ukraine and Russia. Get something for themselves. Like there is a agreement on the minerals resources in Ukraine, and then of course, as far as Russia is concerned, President Trump has not ruled out, the lifting of the sanctions, provided he also gets, other negotiations in favor of the U.S. So it does appear that we are moving slowly towards some sort of a settlement in this regard. On also, we had on the tariff, the situation does look quite gray, because as per the original decision, March 4th was the day when the tariff on Canada and Mexico were to come into effect. But one of his statements to the cabinet, Mr. Trump seems to have indicated that will be in April, that it will be starting. At the same time, he has also said that there will be imposition of 25% on Europe. And so it's a big challenge for Europe, because it's already struggling with the funding of defense by the US government. I mean, the European region already suffering from growth slowdown. Is once again will be hard hit if this becomes a reality. But quite surprisingly, on this day, the Euro stocks have made hit a new all-time high also, which is something that would surprise most analysts looking at the way we are getting the news. In fact, now the fresh news of German economy, we saw the IFO business sentiment actually drop, in the month of February, marginally, of course, but the companies are, in fact, less satisfied with the current business and expectations, and the economy is waiting to see how things develop as far as the U.S. government is concerned. So no economically big good news, but yes, perhaps it is staying somewhat on the weaker side. That is what. As I said, it's very surprising that the DAX and the Euro stocks have hit a new all-time high yesterday in the face of these developments. On China also, there have been more restrictions that is being considered by Trump's team, expanding measures introduced during the previous regime. So that's another development that has kept the market somewhat on the risk off side. But the other news that market was looking at, that NVIDIA's results. They have reported fourth quarter earnings, which has beaten the Wall Street expectations. Revenue rose, and the full year fiscal revenue has also risen 114% to 130.5 billion, and their guidance has been quite strong as well. So I think this should support the market. And the market was preparing itself for somewhat a downbeat assessment, but I think these numbers should be supportive of the market sentiment. On the economic data, we have, of course, today till Friday, we have a good number of data on the durable goods orders, jobless claims, which will probably reflect the impact of the layoffs that have been happening in the under the new administration. GDP may not show much of a change, because whatever drop in consumption and government spending that we are pointing to will have its effect only in the quarter one GDP, and quarter four GDP is definitely a backward looking number. So that may not have much of an impact. Yes, more emphasis will be on the PCE core inflation, which will be coming up tomorrow. Another positive news yesterday was China announcing fresh bank capitalization up to 400 billion. This is the first time they made such a move since the financial crisis of 2008. It can also keep the market sentiment up. Dollar has been steady, or in fact, I would say it has been mixed on various currencies. On the yen, it has been quite strong. In euro, it has been held in a very tight range, but near the higher end of the recent ranges, but has been stronger against Canadian dollar and the Mexican currency, as well as the commodity, the Australian currency, because of the tariff news, as well as this is some hints about the copper imports also being taxed. So that is one reason why Australian dollar has also weakened. So dollar has there are various reasons or surveys being quoted to indicate that US economy will weaken, and therefore the dollar will also weaken. Maybe the policy of the government also will shift towards a weaker dollar, but there is no concrete a statement on this, nor market has seen too much of a hard number to evidence that the economy is slowing. So that is what the market will wait for before we see a definite trend emerging in the dollar. As of now, the slight risk of sentiment and uncertainty about tariffs will keep the dollar a bit off until we get more clarification on the same. As far as the rupee is concerned, we had a very large move, in fact, an exaggerated move on Tuesday because of the culmination of several factors like the month-end demand and then the settlement in the futures market here, and as well as the NDF market settlement, which are supposed to be of very large volumes. But even then, I feel the move of 60 paisa intraday was quite large, and perhaps also was due to some stop losses that were hit because most of the market participants had expected 87 to be held on the upside. So that brought in reappearance of PSU banks at 87.20 levels more than once to contain further fall in the rupee. The outlook on the rupee, I don't see it as a start of a fresh uptick, fresh upturn in the US dollar INR, but yes, it can trade in the higher end of the range until the global uncertainties go away. And let's remember that FIs continue to be sellers. In the month of February, it's already hit nearly 6 billion of outflows, and in this week alone, we have seen 1.12 billion of outflows. So that's not a good support for the rupee. And maybe if the market starts to depreciate the rupee further, RBI will get more active. Thank you.
Thank you, JK. And a lot of things have happened in the last 2 days. On one side, we are seeing weak data from the US economy, at least the consumer sentiment, it's coming out weak as indicated by various surveys. Mr. Besant, the Treasury Secretary, his comments continue to focus on the 10-year yield that has dropped below 4.30%, which is very significant. The probabilities of two rate cuts in the US this year has risen to 65%. Geopolitically, we are seeing some good news. On the war front, President Zelensky could be visiting US for the negotiations, while on the tariff front, situation look gray, as JK mentioned, because there is some confusion with respect to the dates. Yeah, and one very surprising thing which I found was even though Eurozone economy is struggling and Trump's tariff may add to that troubles, DAX and Euro stocks continue to hit fresh highs. And it's amazing how equity markets sometimes behave. In the upcoming data, we have the US durable goods, jobless claims, GDP numbers, and of course the PCE inflation number tomorrow. Very important data. And for rupee, we had a large move on Tuesday, month-end demand plus futures expiry and NDF market settlement. It probably resulted in a move of 60 paisa intraday. But one important thing JK mentioned was that FI continue to be the sellers. So the outflows in February has hit $6 billion. That's it from Australia. Thanks for listening. Tune in tomorrow for the fresh round of updates from the markets. Thanks for listening.